Welcome to today's webinar, to a very serious topic today. First of all, we feel deeply with the Ukraine, with the people, and everyone that is impacted by this war and this horrible situation at the moment. And while there is definitely now bigger things in the world than investments and thinking about money, we still wanted to provide you a bit of insights into the current situation, as many of people are also thinking about what this means for my finances and when I'm saving up for the long run. And we hope with this webinar we can provide you also some answer some of these questions already. Maybe before we start, a quick round of introductions. My name is Kevin. I'm one of the founders of Selma, and I am the host of today's session. With me today here is Patrik, my co-founder and CEO. Patrik has also quite a large or long history in the financial market and can explain definitely quite a lot of details regarding the current situation when it comes to all the financial related topics.
Hello, good evening, everybody.
Before we jump in today's agenda, Patrik, we have taken now time for the next around 40 minutes to then dig deeper into different topics.
Yes.
Maybe you could walk us quickly through what's on our agenda for today.
Yes, of course. So there is different parts that we would like to look at together tonight. So first we will have a look at the current market situation, what actually happened in the financial markets. We will look at concretely at sanctions, and then a word you might have heard about in the last couple of days, SWIFT, as one of the sanctions and how it impacts the whole situation. Then we will go over to what this means for Selma and the investments you're having at Selma. Then what is our advice, how to act and should you act? And then in the end, we will also have a look. All of us might also feel a little bit helpless about the situation. So we will look into what are means to actually do something and help the situation in the Ukraine.
Great. Then maybe let's jump right to it, and let's start by wrapping up and providing a quick update on what has happened and what's kind of the root cause.
Yeah. So I think all of you have seen or heard in the media what happened. So Russia has started an invasion on the Ukraine on February 24th. This is actually a part of a conflict that's already going on for a while. So it has started with the annexation of the Crimean Peninsula in 2014, and then there was also an ongoing situation in the east of Ukraine where there are a lot of where there is a large Russian community, and now basically has led to this war and this attack, and has created a big crisis in the area. It's the first war in Europe since ages, a big economical and humanitarian crisis, and of course it also had impact on the European and on the global markets.
Yeah, now as you mentioned it, and ended with the situation on the global market as well, it's probably we have been following closely. I think every one of us has been following closely the situation, how this war is developing. But maybe we take a quick look into what is the current market situation. So what
yes, of course,
there, and we can take a bit of a closer look regarding these topics. So
Yes, so I'm happy to give you a little bit of an insight. So what we can see basically after a year that's been quite positive on the market in 2021, despite the Corona crisis that was there, we already have been in a situation where most of the markets around the globe have been priced quite expensive. And in a situation where markets are expensive, that also means that any movement and any additional insecurity can lead to big movements in the markets. So what's actually driving the markets are things that are uncertain. So it's not just the war itself, but also the uncertainty that it brings for the future. So how could this be escalated? What will the sanctions do? What is the influence on trade? And what we have seen in the last couple of days are when we now look here at the European stock market, it's the Euro Stoxx 50, it's the 50 largest companies in Europe, that in one day we had a 6% drop. We also had a recovery after that. We had another drop. So what we see is just the fluctuations currently. They're stronger than what we have seen before. When we look at the beginning of 2022, the markets they're negative, and also there are new fears that this also has a negative influence on the economic development in Europe, and so that's possibly a new fear that's around in the markets now.
Yeah, I think throughout whole autumn already there has been a lot of discussion about inflations and growing inflation in different countries. So I think this has been already driving some fears. But what's the situation there now? How has that been developing?
Yeah, so basically the new word that we've seen being talked about in the financial markets is not inflation anymore, it's stagflation. And I'm happy to explain this a little further. So stagflation, as the word, you can see it here, says, is a combination of two words. So it's a combination of inflation and stagnation. So it means you have inflation, prices going up in an environment where the economy doesn't grow. So where there is more unemployment, where the companies can't grow their profits. And why is this a problem? It's because usually the national banks, they're reacting, right? So they're reacting if there is if the economy is not growing. How the national banks would react is by decreasing the interest rates. So they would make it cheaper for companies to get new capital, to invest the capital, to build new projects, to employ more people. So they would push more money into the markets. So the issue with inflation is that you need to do exactly the opposite. So if you don't want to get prices further up, you actually should take money out of the markets, that things don't get even more expensive. So the national banks, they might actually be in this environment, in a situation where they have to decide which sides they would like to cater, or what would they like to do. So they're in a situation where they should increase interest rates because of inflation, and they should decrease it because of the economic growth, which is pretty difficult situation to steer.
Okay, thanks for explaining that. But next to this kind of economic worries, there's now lots of talks in the past days about a big topic around that's related now to particularly to the Russian and Ukraine crisis and war. That's the sanctions that have been place. Maybe we can take a quick look at what these sanctions are and what impact they actually have.
Yes, of course. Happy to do so. So, of course, the sanctions are important because they also lead partially to the stagnation, right? The stagnation part that you have seen. So, because they influence trade. So what we have looked at with the sanctions is the things that are actually decided and talked about, and what influence they have on the financial market and how the markets behave. So there was quite a lot of talk about asset freeze for private people, so the Russian oligarchs, and travel restrictions. So people cannot fly out of Russia anymore. You cannot fly with a Russian airplane through European airspace. Here, what this does, this is mainly to put more pressure on the Russian regime. The Russian oligarchs, they're powerful people. When their assets are frozen, that's not something they like. So what the EU and also Switzerland with those sanctions would like to reach is pressure to put an end to the war. In terms of what this does to the financial markets, the effect is medium, so it's not the highest effect here. Then the next topic that we look at is Nord Stream 2. Nord Stream 2 is a gas pipeline from Russia to Europe, which has currently been put on hold. It's a new pipeline, so currently there is no gas going through that. Gas currently flows through Nord Stream 1. So that has not an immediate effect on the market as well. It might have an effect, though, when we talk about future energy prices, and energy stability. So will Europe be needing to become more independent of the Russian energy, which in certain countries is quite a big share? And what will this do to energy prices? And then finally, what will it do to prices of producing things and the economy? Immediately, the effect here is not the highest. Then there is a special asset freeze, and it's the asset freeze of the assets of the Russian National Bank. So the Russian National Bank holds around a third of its assets, not in Russia, but abroad. So those are dollars, euros, and so on, that they hold with other national banks. And freezing this money, which is hundreds of billions, basically decreases what they can do when there is now pressure on the Russian currency. We've seen media pictures where people in Russia go to the bank and withdraw their money or try to withdraw their money. So this decreases the ability of Russia to basically strengthen their currency and also give out loans to those banks to support them. That has a higher influence on the market because it's immediate and basically restricts the ability of the national bank and what they can do, especially, of course, has a direct effect on the Russian economy. So also built to have more pressure there. Then the thing that has the highest effect is this word, you might have heard it, SWIFT, that basically influences the Russian economy, but also the European economy.
Yeah, you mentioned now there has been a lot of talks about SWIFT in the past days, so it's like it's in every media outlet at the moment. Maybe that's not something that probably everybody knows, so maybe you can quickly explain what this is and what's behind it and what's the thoughts behind putting sanctions on.
Yes, and also I think it came almost as a surprise because it's just such a hard sanction that all the European countries would agree to actually put in place what they have done. So SWIFT, it stands for Society of Worldwide Interbank Financial Telecommunications, which probably doesn't explain yet what it is. So how you can imagine is SWIFT is what banks use for transferring money to each other. It's basically a post for money. So when a bank from Russia would like to send money to Europe, or a European bank would like to send money to a Russian bank, what they're using is SWIFT. You might also have used the SWIFT code if you do an international transfer. And this influences trade quite a lot because every trade has two sides, right? So if I buy something from Russia, whatever it is, if it is coal or oil or whatever, there is the side of the goods that need to move, but there is also the side of the money that needs to move. And what cutting out SWIFT does, it basically cuts out the Russian banks from this financial system. And it's still possible to transfer money between banks, but it needs to be done fully manual now. So if you need to transfer money, you would need to write emails from one bank to another or send letters and so on. And the whole electronic banking doesn't work anymore. And that means also a big part of the trade doesn't work anymore. And that is basically also the reason why a lot of Russians now internationally, they can't use their credit cards, they can't use their Apple Pay, they can't use all of their electronic payments. And it's not because their card wouldn't work, but it's because the transaction in the background doesn't work. And this is a very drastic sanction, has been used once against Iran in connection to their atom program, and has basically led that in that situation, because it had such an impact on the economy in Iran, it brought the Iranians back to the negotiation table in that situation.
Okay, thanks for explaining and sharing a bit of the backgrounds here. Yeah, so we heard like about sanctions and the current economic situation. So there's a lot of uncertainty and in the current situation, and definitely a lot of tensions as well. So now many of us are asking themselves, and it's like how does that kind of affect then investments, and particularly now the ones that I have at Selma, for example.
Yes.
So maybe we can jump right to that topic, and
Yes.
maybe we can start by a very specific question. So which is many of our users might ask themselves now. Now a lot of sanctions have been placed about towards Russia, but how much actually do I invest via Selma into Russia? So what is my so-called exposure there?
Yes, so of course the portfolios at Selma are different because they're tailored to our customers. So it will not be the same for everybody of our customers. But what we looked at basically is the maximum that people could have in those areas. So what Russia is concretely, it's part of the so-called emerging markets. And there Selma has invested. So we have two products that invest into emerging markets. There is one in the sustainable portfolios. In the sustainable portfolios, the emerging market setup has no Russian companies. So there, your exposure, so-called, as you said, it is zero. In the other fund, it's roughly 3% of the money that is invested into Russia, and that means then when we look what the highest part of this emerging market fund in a portfolio is, it's maximum 0.5%. So it's quite a small share in our portfolios. What is talked about at the moment is from the providers of those ETFs that Russia is not investable anymore as a market, and that's based on those sanctions that we have talked about. So there is talks actually about removing Russia out of those products completely.
Okay, great. So then now we already talked about the different investments and geography, and we learned now that there's the investments into the Russian markets are pretty small, but maybe we can take a bit of a broader look into that. So how the investments are in general set up,
Yes.
and what it means then.
Yeah, sure.
Spreading in different geographies.
Yes. So I think what's important to know about the investment strategy of Selma is that we never just invest into like 10, 20, 30, 40 companies, but the investment strategy of Selma is built on so-called ETFs. That means you always own thousands of companies. That also means if there is something wrong in one area, that doesn't affect all your other investments. So if you don't have the risk that a certain airline doesn't work anymore, that a certain business now that does business with Russia is affecting your entire wealth. how this is built is that we look at the view of a global investor. So we look at how would the average of a global investor invest, and then that's what we take as the basis how we spread your money across the globe. And the reason for that is that this is by definition the most effective investment strategy, as money flows there where it can generate the highest risk-adjusted return. And so the basis of your portfolio is always very broadly diversified. What we do on top of that, and that's from a risk management perspective, I said before, markets have been priced very high already. So we look at those prices. We look if we see a bubble building somewhere. So we already started to take risk out of the portfolios last year. As when there is too much risk, there also the risk of decrease is too high, and we shifted that into other investments that can balance the portfolios out.
Okay, maybe as a learning and takeaway from this, so it's important to kind of split and spread your risk, so not putting the classical eggs into one basket. So
Yes.
Selma has been helping investors by splitting them across the globe.
Yeah, it's important now in this crisis, we can see it, right? So that your exposure in a certain thing is not too high, but it's also our belief that this is a very important guideline in general.
Great. And then I think you have been mentioning now as well that Selma has been already shifting into different investments. So next to kind of, now we're talking about the global markets, and next to the different spreading around the globe, maybe there's what else there is that need to be taken into account in that sense?
Yes, so what we do, as I said, we're doing active risk management, and for us that has meant that we also have put some of the money with Selma, not just in other markets, but also in other so-called asset classes, so in other things. So it's not just different companies, but it's also different kind of investments that behave a little bit differently. And that's something that we could discover very well in the last couple of days. So, right, I told before that we had days where the European stock market has been 6% minus. On the other hand, on such days, we saw gold and silver prices go up 3-4% on the same days. And of course, when you have invested like that, that gives you less ups and downs in the portfolio, and it also had the effect that now when we look at 2022, that actually the losses in Selma portfolios have been contained in comparison to the market. So that our portfolios have lost less because there has been this balance. It's also in a certain terms, to hold a certain parts in precious metal is kind of an insurance for the worst case. The precious metals we hold, they're actually like in gold and silver in the vaults of ZKB and UBS in Switzerland. So it's not just a product, but it's actually metals that lie here somewhere around here, not beneath me, but probably very close. And so that's a storage of value. What's important though, it's not our advice to now put everything into those metals. It's important to also keep the diversification over different. It's not a good idea to just now put everything into gold. But I will talk a little bit more about that when we talk about what kind of advice we have.
Yeah, good point, because then we can move actually to that directly. So now we have been talking about these measures and what Selma has been doing, and how the investment plan and strategy has been setting up. But maybe we can take a step deeper and talk about what I should be doing as an investor in that sense. What should I keep now in mind? Many might have these questions that should I buy now?
Yes.
Should I sell my investments now? What if I want to invest now a larger sum? Is now the moment? What are the things that I should keep in mind here?
Yes. So I think the very first thing here is that, and that we have seen from crises in the past, right? So if you invest for the long term, it's also pretty sure, even we don't want this, that you might hit the crisis at one point. And when we look at the crises that happened in the past, usually it's not a very good strategy to panic. So you need to look at this very structured. There might be situations where in a crisis it is good for you to sell, but it is based on your personal situation, not on the market. So the issue with selling is always also the question, okay, when should I buy again? And we know from the past, it's very difficult or almost impossible to hit the right moment, to buy, and to hit the right moment to sell. And that's why you should go about this with a very structured approach that actually is a good approach despite of hitting the right moment. So our strategy is here to actually have your plan set up in the right way, to have the proper risk management, and to not panic, but actually be very systematic about this. And there are certain points that you need to keep in mind when you're being systematic about investments. And I think that, yeah, we can probably share some of those.
Yeah, I think those are what people are most curious about. So what would be the action points that I should now keep in mind when I'm looking at my situation?
Yes, so there are a couple of points. So what's very important here is the part of your plan and to have your cash buffer checked out. Cash buffer, that means that's the amount of money that you keep on your account to pay for expenses that might come up that you might not even have expected, so that you have always enough cash that you don't need to sell your investments in a bad situation. So I think the worst what can happen is that you have an unexpected bill and you need to, in a dropping market, you need to sell off just because you just need the money right now. You're not you don't have the ability to wait for better times, but you need the money now. So that you should certainly avoid. Then the cash buffer is also, it's not only the cash buffer, but what defines the cash buffer is also your future expenses in the short run. And short run here doesn't mean 2 months, but when you talk about investment, it can actually mean in the next couple of years. So if you have a big expense, and one of the examples is a client of ours that plans to buy a house in 2-3 years. And there is a certain capital that you need for that, right? So it can actually be a good idea to think how much, what is my ability to lose, and how much can I actually invest without having the situation that I can't afford this house anymore. And if you have those kind of situations, it can actually, even in a crisis, it can mean that you should move part of your investments into cash because your risk is just getting too high, and you can't afford to lose more because that would risk your future expenses. So that's one part, and there you should do a little bit of planning on a rolling basis, actually independent of the market. So what you should have the right cash buffer in place basically before a crisis hits, so that in a crisis you have the financial ability and also your plan set up in a way that you don't need to sell. And that's the second part, and it's very closely connected to the first part. So the money you should have invested should be for the long run, and long run, that means 10, ideally 15, 20 years, so a long time. So when I told before that there is almost no market period where you wouldn't hit the crisis, and we've seen now 2 in the last 2 years, right? So there is almost no market period where there is no crisis. So as a long-term investor, you expect that there might be a crisis, and the plans you build, they are built for those scenarios as well. Then when you also look at the long term, on the opposite side, you also see that there is no 10-year period where you actually would have lost money. So the markets have always recovered over the long run. It's just very bad if you have to sell in the wrong moment.
Okay, so to recap at this point already, so it's first of all, I need to check that my cash situation is safe in that sense, and I have any cash buffer, and I have not money invested I actually would need.
Yes.
And the second part is to take a step back and think on, keep an eye on the bigger picture and the long run.
Yes, exactly. And then, I mean, this is the emotional part about investing. So now markets have going up and down pretty rapidly, right? And what this might do, it might affect you emotionally. So there is a certain, there is, of course, a negative feeling involved with the connection of losing money. And that's very natural. But on the other hand, it's also very natural that those things are going to happen when you invest for the long run. So what you need to do if you feel negatively about this is have a look at your overall risk profile, because what you can do by adjusting your profile is that the fluctuations on how much your portfolio can go up or down, they can be reduced.
Okay, and so as an Selma user specifically, so that would mean that I would check my investor profile, make sure that actually the things that are there are up to date and that they reflect actually how I would actually react to the different scenarios also.
Yeah, exactly. So it's two things. So it's your personal financial information that is in there, which gives us an idea about your ability to take risk and how you're affected by a loss. But then there is also the questions that ask you about the risk scenarios, how much risk you're willing to take, how would you react in a crisis, and it makes sense to keep them updated if you now feel okay, you're affected by the losses. And then as a fourth point, and this is actually something that a lot of our clients also do, is you can of course balance this by investing regularly. So if you invest regularly part of your income, if you don't invest all at once, that means you will invest at different points in time. So when there is a point where you actually, when markets drop, it means you will buy the same thing cheaper. So you can basically, from that perspective, take advantage when there immediate drops in the market, and that will lower the price at which you have bought. And so you get basically an average over time.
So in very specific question, practical situation now, many of our users are saving on a monthly basis, and would it make sense then to kind of stop investing monthly at the moment, or?
Usually not. So usually that doesn't make sense, because now you're buying at a cheaper average price, right? So it makes sense to basically follow this pattern. Like once it goes up, once it goes down, and that is what gives you, following it is what gives you the average. If you just buy at the high prices and then you stop when markets go down, then you get a different average. What you need to look at, and that brings me back to the first point. So if you see, okay, my cash buffer is not big enough, I want to get more cash on the side to also be more prepared, to have more security, to basically have, if something would have happened, to have more buffer there. Then what you can do, of course, is that you don't invest for a while and you build up more cash.
Okay, great, thanks. As we are moving, I think, towards the end of our today's webinar, let's get back to a very serious and important topic. Many of us are definitely asking themselves as well how to support the people in the Ukraine at the moment. We have definitely been discussing quite a bit about that also in our team. Maybe Patrik, you can share something about that.
Yes, of course. I mean, some of you might know that. It's also a co-founder of us, Valeria. She's Ukrainian, so it affects, of course, our team as well. And that's why we also have looked in our team, how we donate and how we help. We do that in Switzerland. We do that through Glückskette. This can also be used quite easily through Twint, so you can Twint them money, so it doesn't take a lot of time. We also know through Valeria that actually the help is arriving, so that the money gets to the Ukrainian people, and that those institutions that we have listed here, they also have a track record to bring help to people. There are also some, when you look at them, and that's probably something we shouldn't forget, right? There are other places in the world where there is a crisis as well. It's the Ukraine, but it's also other places where there is a war. So there are also some options here where not your whole money gets to Ukraine, but also you support other good causes around the globe.
Thank you very much. We are already moving towards the end of today's session. We hope that we could provide you a bit of insights into the current situation, also by answering some of your questions. I see that many of the questions has been also very actively used or asked in our chat. The ones that haven't been answered yet, we will get back to them also via email. Also, the webinar will be sent out as a recording in case you would like to dig deeper or take a look at it once more. And I think important is whenever you have specific questions, you can always also reach out to our support team through your Selma account.
Yes, thanks a lot for being with us tonight. I think we all hope that this situation will not remain as it is. And yeah, I hope that still we were able to give you a little bit of insights tonight.
Thank you, and have a nice evening.
Thanks. Bye-bye.